Hello and welcome to Module 3 of the AAM Advisory Consumer Awareness Guide video series about hiring a financial advisor. Today we're going to learn the 8 critical questions to ask when meeting with a financial advisor representative. Questions like, number 1, what makes you unique? Number 2, what makes you adept in your field? Number 3, do you offer proprietary products? Number 4, will you be the only financial advisor representative working with me? Number 5, how are you compensated? Next, how do you report investment results to your clients? Number 7, what is your personal financial picture? And last but not least, number 8, if things do not work out, what are the costs of separating services from you and your organisation? Now, I'll address each of these questions in turn, but before doing so, and because AAM Advisory is a licensed and regulated financial advisor, we need to make you aware of the legal notices pertaining to this video series. You can read these legal notices in full by clicking the disclaimers link at the foot of our website, but for the purposes of clarity and in plain English, it means that you're an adult, and as an adult you need to be responsible for your own research, your own decisions and the actions you take. You should not, on the other hand, rely on any of the information presented in these videos, because whilst we do strive to be as accurate as possible, we cannot guarantee it. Okay, so with that being said, let's move straight on to the first question. When meeting with a financial advisor representative, it's important that you understand what makes them unique. Whether you establish this directly or indirectly is irrelevant as long as you know. Because, as we mentioned previously, not all representatives are the same, nor do they possess the same experience, knowledge or wisdom. Every representative has their own unique process for how they work with their clients and how they generate the recommendations as well. And you must understand this process. After all, their unique process should be one of the primary reasons why you work with this individual advisor and accept their advice. So now you know what makes them unique, you next need to understand what makes them adept or qualified to give advice. When you're considering hiring a financial advisor representative, determining their education, tenure and credentials in the industry are all important. They are not, however, necessarily mutually inclusive. Let me give you an example to demonstrate. How would you evaluate the following 2 advisors? One is 50 years old and has lots of qualifications, but has just entered the industry 3 years ago after changing careers. The other is 40 years old, has no qualifications, but has worked in the financial services industry for the past 15 years. Who would you choose? More importantly, why would you choose them? There is no simple answer, A or B. You should ideally choose the one who you feel is most capable, the one that you have the greatest confidence in. The next question focuses on proprietary products. It's vitally important that you understand what, if any, of the investment products being recommended are proprietary. Some financial services companies only offer their own products. If this is the case, conflicts of interest might foreseeably arise, simply because it's almost impossible that any proprietary company has the best solution with every product. Furthermore, in the event that the relationship with your advisor doesn't work out and you need to move your investments to another company or advisor, you might be forced to liquidate the proprietary investments, which could result in penalties, a loss of money or taxable consequences depending upon where you're based. However it works out, it would not be a pretty position to find yourself in. Seeking and working with an impartial financial advisor representative can easily prevent this happening. So, now you know what makes them unique, why they are adept or qualified in their field, and whether they use proprietary products or not. The next question you'll want to ask is, will they be the only financial advisor representative working with you? The answer is not necessarily. Financial advisor representatives can work with you directly or have others in their office or organisation assist you when it's required. You can always ask to meet other people who might be involved in working with you if it makes you feel more comfortable. It's also common for financial advisor representatives to work with other professionals outside their own practice, like lawyers, insurance agents or tax specialists, to develop or carry out the financial recommendations that they want to put in place for you. They should also be willing to pass you a list of their contact details if you want to check out their backgrounds. Now we move on to one of the most misunderstood questions. How are you compensated? The way financial advisor representatives receive their income varies widely within the industry. Where they are located and regulated also plays an integral role. For example, some advisors will charge an hourly rate or an all-inclusive fee for their services. Others are compensated through sales loads and commissions charged on the investment products that they recommend. And then there are advisors who will charge a fee based on the value of the assets they manage on your behalf. Irrespective of the way they receive their compensation, you need to fully understand what the fee or charging structure is and how this compares in terms of the overall financial services industry and the industry in your local area. Your objective must be to work with an advisor in a manner where your interests and theirs are aligned. Most importantly, you must be confident that your interests are at the forefront of the advisor's mind when they offer you investment and financial advice. Next, you need to explore how they report investment results to their clients. As a minimum requirement, all financial advisory companies should provide quarterly statements, and many now offer quarterly performance reports as well. Usually you'll find they're on an account by account basis and include information which might not be specific to you. Furthermore, the institution with whom you invest your money will report directly to you on an annual basis above and beyond the statements you receive from your financial advisor. I would recommend that you seek out an advisor who provides results which include your most recent yearly reports comparing your results against a suitable benchmark. In addition, you want reports that maintain a running tally of all your monies entrusted to their care during the lifetime of your relationship. This makes it very simple to see whether value is being added or destroyed over the course of a full market cycle. Next, if you're going to seek advice from a financial advisor, make sure that they follow their own advice by asking them about their own personal financial situation. This is not something that most clients do, but it is something that you shouldn't be scared or worried about doing, because it's vital to establish that your advisor has confidence in their own recommendations. Finally, if things don't work out between you and your advisor, you must understand what the costs of separating from them will be. This will of course vary depending on the fee structure of the company with whom the financial advisor representative works. In most cases, there is normally no charge imposed to change advisors or financial advisory companies, although you might find that some companies impose a standard transfer fee, which is going to vary from company to company. However, you'll often find that when a fee is imposed, it is likely to be reimbursed by the new company you're moving to in the event that you decide to change advisors and/or company. This should be one of the only fees you have to deal with, if there are any at all, when transferring your account. Just make sure that there are no contingent deferred sales charges, what are commonly known as back-end fees, still in force if you own proprietary investments. If you find that there are any potential back-end fees involved, it might be wise to leave your investments at your current advisor's company until the charges expire. You can then move them over at a later date without penalty. And that's it, the 8 critical questions to ask when meeting with a financial advisor representative. Thanks for watching once again, and we hope you enjoyed this video as much as we enjoyed making it for you. As always, if you have any friends or colleagues who you might feel benefit from watching this video, please share it with them. It's really easy because all you need to do is click any of the icons you see below. And finally, just before we go, we'd really appreciate it if you click the I like this icon just below. And if you want to post a comment, please do so. We'd love to hear your thoughts on Module 3. Thanks again. We'll see you again in Module 4.